So thank you everyone for being here this morning. This is a workshop dedicated to the members of the Observatory. It's one of the initiatives that we have built for you, and we have thought to set up this workshop on a topic that we know obviously is of big interest when we talk about innovative companies. That is the topic of investment. That is a very important and fundamental part of the business of every innovative company that looking for resources to invest in their business. We have three speakers for this workshop. I share with you the agenda, which is very straightforward. So at the beginning, Rodolfo Pambianco from Rodolfo from Barclays Investment Bank. Now he will let him introduce himself. He will provide an overview of how at Barclays they see the investment opportunities in insurtech, generally speaking. And then Rodolfo will be involved in a chat, in a panel discussion, together with the other two speakers. That are Dominique Roudot, that is one of the advisory board members of the Observatory, and Matt Connolly, the founder and CEO of Sonor. I know that all of you, or big majority of you, already know Matt and the great things that they are doing at Sonor, and investments and M&A activities and insurtech in general are their core business, are topics that they follow and they know very well. And so I think we created a very interesting panel of speakers to talk about this topic. So I would okay, sorry, there was another hi, Sebastien from the Care Voice, that's right.
Hello, Yuri. Hi, everyone.
Hi. Just explained the agenda, which is very straightforward. I will let the three speakers introduce themselves, and then I will pass the ball to Rodolfo for his keynote. So I follow the order of how I see you in the screen. So Dominique, please, if you want to introduce yourself.
Sure. So Dominique, pleased to meet you all. I used to be working for Hanover Re until a few days ago. I joined a VC in Silicon Valley called MS&AD Ventures, and before that, I was the Chief Underwriting Officer of Global Accident and Health for Chubb.
Thank you, Dominique. Sorry, I forgot to mention that like all the workshops and webinars for the Observatory, this is going to be, I am recording it. I will send you a link to download the recording after the workshop. Matt, if you want to introduce yourself.
Good morning all, and well, good afternoon to all those in Asia. Yes, I'm Matt Connolly. So I'm the founder and CEO of a company called Sonar. We are an insurtech scouting and open innovation business. So we work with large incumbents and investors around the world, and we help them identify and create new opportunities, normally through partnership with startups.
Excellent, thank you, Matt. And Rodolfo, I let you introduce yourself, and then you can go and start with your presentation.
Absolutely, thank you, Yuri, and good morning, afternoon, everyone. I'm Rodolfo Pambianco. I'm responsible for insurtech banking across Europe and EMEA for Barclays. in the investment banking division, and what we do, we work with either incumbents or insurtech companies in strategic transaction, being capital raises, being listing, or being M&A. So that's what we do. We work in a very close partnership with colleagues based out in the US and in Asia to try to sort of offer a global coverage of the market that as we will discuss today, insurtech is probably not just Europe, but it's really sort of a global trend. So having said that, Yuri, if that's fine for you, I can probably briefly start with my few slides for today.
Yes, please. We haven't done the test, so if you can kindly try to see if you're able to. Yeah. If not, I will do it for you. And
let me try.
Yeah.
1 second. I'll try to share my iPad screen. All right. So, can you see the slides?
Yes, perfect.
Yes. Super. I assume you cannot see me, or you can see also my face.
Actually, I don't.
Yeah.
No, we
can
see only the presentation.
Okay. No worries. I'll as soon as I'm done with the pages, I'll stop sharing my screen. But so first of all, thank you everybody. Thank you, Yuri, and thank you to all the members of the Open and Embedded Insurance Observatory for the invite. It's really a pleasure being with you today. So in my speech this morning, I'd like to spend, I'd like to divide, let's say, my speech that will be, I promise, brief, into 3 different sections. And the first thing I'd like to do, I'd like to spend a few words on the current environment for the insurtech funding across, the globe, trying to elaborate some conclusions on what's going on at the moment in the market in terms of investments and trends that are becoming more and more sort of visible by analyzing a little bit the data. Then, given that the US market remains the largest one in terms of investment in insurtech, I'd like to focus my attention there. Clearly, as you all know, there are already few insurtech players listed in the public market, so we will spend a bit of time talking through that as well. And finally, given the audience today and given my role, I'd like to conclude with an overview of what is the current situation in Europe and which are, let's say, the hot topics that I'm actually seeing in the market. So let me start with my slide number 1. So this is a snapshot of the insurtech investments. So I think some elements emerge from this page and from this data that are basically, as you probably know, the data, coming from different sources might differ a little bit. Here we are saying that 2021 investment in insurtech have been 14.4 billion. There are other sources that basically have different data, but I think the conclusions will all be the same. And the first one is that insurtech investment in 2021 had recorded a record high, almost doubling versus what it was in 2020. So that's, I think, the first conclusion, that irrespectively of the source of data, I think this will probably hold. The second one, the second information that emerged from this page is what we can actually see from the bottom right chart of this page. And basically, that the US market is the largest one in terms of investments attracted, followed by EMEA, and followed by APAC. So some commentary out of this data that can look a bit sort of simplistic, and if I talk to them this way. So the first commentary is about EMEA. So EMEA region registered a big increase in 2021. And this is in particular thanks to, I would say, some specific mega round that actually happened in 2021. You all probably have seen, for example, like WeFox that raised more than 500 million euros in 2021. So this is part of the explanation, so some specific mega rounds. For what concerns APAC, I think if you look at the same data for 2020, you know, America's clearly being the largest market in terms of fund raised, and APAC and EMEA basically having the same share. Now EMEA, as we mentioned, basically went ahead of APAC, and APAC looks that is still lagging behind from this point of view. But I think it's fair to basically have two comments for the APAC and Asian region. The first one is that the Asian insurance market is very big from, you know, traditional insurance perspective, and therefore, you know, expectation is that, you know, catch up on insurtech investment will, you know, is very likely to happen in the future. That's first commentary. Second one is that APAC investors tend to invest massively also outside of their region, and are responsible for some of the investments that are actually captured in the US and EMEA data. Therefore, I think, you know, if we look at the money spent in the APAC region plus the money spent by APAC investors outside of their region, the number is likely to be much bigger than that. Then the third observation that comes out of this page is in relation to potentially looking at the chart on the top left. And apologies, I'm just, you know, jumping across the charts, but hopefully it's still sort of easy to follow. So the top left chart basically tried to divide, you know, the fund raised in 2021 across the different product line. And no surprise, P&C remains the largest representative here. And the main reason is that P&C products are somehow sort of easy to understand, easy to be sold, and therefore get along very well with a digital and technological offering. And therefore, no surprise, most insurtech in their early days tend to focus more on this business segment, and as they mature, and therefore as the overall insurtech sector mature, they tend to expand across other product and other business line. So I think, you know, the more we'll see the insurtech industry maturing, the more we will see, you know, other product line getting bigger. So moving to the second page. Here, I think, you know, again, some trends on the insurtech funding that we're actually seeing at the moment. The first one is, if you look at the bottom left chart, what you can see, you know, the funding rounds in terms of number of deals is actually being divided in this chart by stage of the development of the company raising funds. So the dark blue is early stage, and, you know, up to the light blue that is late stage. So meaning that, you know, that round has basically been done by a company in that is more mature. So what we can see in terms of trends is that early stage rounds are actually in numbers are still, you know, the majority, because 2021, 58% of the insurtech rounds were early stage, but the number is actually going down. So that means clearly that the industry is actually maturing, right? So in the past, majority was all early stage, and now we have, you know, companies that are, you know, maturing, industry overall maturing, and therefore the share of mid stage and late stage is actually becoming bigger. So that's the first signal. The second one that is quite, you know, important, I would say, in my view, is what you can actually see on the chart on the bottom right-hand side. Here you basically have the number of M&A, SPACs, and IPO. the figure that is, growing massively is the number of M&A in the insurtech sector. So what it means, few explanation from, let's say, my point of view of why M&A in the insurtech market is actually increasing. The first one is related to the market environment. So the funding environment more recently is becoming a little bit tougher, I'd say. So investors are more selective in what they want to invest. And some companies that, at the beginning of their journey, they saw basically their company, becoming the next unicorn, now are facing some issues in raising Series A or Series B type of round. And therefore, what we are seeing is that some companies that goes out to the market advertising a Series A or Series B, sometimes, especially recently, struggle to execute, and the option of M&A that was not on the table at the beginning becomes a concrete option for them in order to monetize. Point number two, that is strictly related to that, is the investor sentiment. Being more selective, as we already said, but also trying to focus a little bit more on mature business, and therefore they are more willing to participate in large and late stage round rather than early stage. Last point that I think is also an important one is that what we are seeing is that there is an increasing trend of M&A activity among insurtech players, where you have some large insurtech players that are cash rich because they have for example raised mega rounds, that they look at M&A as an accelerator for them. Accelerator around different point of views, being going into a new geography instead of setting up from scratch, expand their product lines, or for example also acquire an insurance license instead of going through the full authorization procedure. Then if we go to the next page, I'll be brief here. Here you just see which are the strategic the participation from strategic investors into the round. As you can see, 2014, 2015, only 20 round out of 100 basically saw the participation of a strategic investor. In 2021, this number almost doubled, actually more than doubled, to around 42-43%. That means that this is another sign that the sector is maturing. There is more attention from incumbents and strategic investors in participating in the rounds for several reasons. We will probably have a chance to discuss later on. But clearly, once a sort of an incumbent invests into an insurtech, they do it because they feel that the technology is promising and that they want to integrate it at some point. Number two, they want to understand more, and therefore, the only way to understand more, according to them, is to make an investment. And number three is because some of the traditional investors also have, let's say, a VC-style approach, trying to also get, let's say, financial return. I think out of these three reasons, potentially the first two, so I like the technology and might be integrated into my company and I want to understand more, might be and actually are definitely achieved also without an investment, in my opinion. So you don't need to invest in order to get to point 1 and 2 I mentioned, because there are different other ways. There are partnership alliances that you can actually sign. Point number 3, clearly, VC style approach, clearly you can achieve only through an investment. Then moving to the US market, so sort of second part of the speech, I think this page is definitely not encouraging, right? Because on the right-hand side of the page, you can actually see some of the US players that have been listed, and basically this call it InsurTech champions because we're really the first sort of accessing the public markets now are down between 80 to 90% since 1 year ago. Does it mean that the InsurTech industry is just a big bubble and will disappear shortly? Answer is definitely not, as we have seen from the number of investments and the size of investment, number of rounds in previous page. But clearly, what happened in the market, is due also to some specific element, and actually also is due to a shift in terms of investor perception and key elements that are actually analyzed. I would say some explanation on the left-hand side. First one, profitability. As you probably know, these companies are not profitable as yet. Profitability and won't be profitable potentially in the short term. And I think, from an investor perspective, the path to profitability has become, an area of greater scrutiny. While you can definitely list a loss-making business, I think, path to profitability, ability to reach the profitability in the near and medium term has become, more and more relevant in the investor eyes. Second point, very much linked to that is, cost of acquisition, clearly going direct because all these players are direct insurer, going direct as a cost, acquiring customer as a cost, and this continue to depress, I think, the profitability. Then I think, the point on earnings is more, let's say, a point on trend. I think investors in the market are much more focused on KPI trends. So it is definitely they are definitely more positive vis-a-vis an insurance company where the loss ratio goes from 100 to 90 to 80, rather than a company where the loss ratio goes from 75 to 70 to 75. So I think, the clear sort of trend and improving trends is becoming more and more important. And then I think, all this element also goes down to listing readiness. Clearly, there was a time, I think in January 2021, where some of these players were actually trading at 11 times 2 years forward GWP. That if you apply this multiple to any traditional incumbent, you get valuation in line with Apple, right? So I think, there has been also, a wave where people wanted to basically take advantage of very rich valuations. So the next page is a little bit of a focus on insurance fundamentals. So trying to, this is an analysis we actually have developed. It is based on public data that somehow try to reinforce some of the point I was actually making previously. So if you look on the top left chart, what we have done, we have actually tracked the number of questions that investors were making during the public conference calls to the management of the InsurTech players. And we have divided this question across 5 different categories: technology, growth, product, insurance, and COVID. As you can see, Q2 and Q3 2020, the question focus was 50%, more or less, dedicated to technology and growth. The insurance component was below 20%. So it means that, at that time, the investors were very much focused on, the technological stack, the disruptor, let's say, view, and the growth prospect. We have run the same analysis in the second quarter 2021. And as you can see, there is a big, difference in terms of insurance proportion of questions. So the insurance-related questions almost more than doubled in the Q2 2021. And the insurance question were now accounting for 40% of the total question. So it means that, also from an investor community point of view, while initially they were focused on, technology, product, growth, etc., they start realizing, well, we are investing in insurance companies. Technology is super important, but we are investing in insurance companies. Therefore, let me dig a little bit more about, insurance capability. What's your loss ratio? Which are your trends? How you do the underwriting process, etc., etc. And this was also, a reason of, challenging some of the insurtech on some insurance fundamentals. So, concluding my speech, a little bit of focus on European industry. So European industry in terms of investment raised was a record year 2021, more than $3 billion raised by the sector. I think there are still no listed company in Europe. And I think, the reason why there are still not listed company, clearly, performances in the US, but also ability to basically benefit a little bit from what happened over there. And, in our discussion, if you talk to insurtech companies across Europe, I think, there are some common themes that are basically being discussed between, the founders, the boards, and the investors. So the first one is that, growth, it's important, but, everyone now, as we speak, is basically revising the growth plan, taking into account also loss ratio and insurance fundamentals. So while everyone prior, 6 to 12 months ago was preparing business plans with 100% year-on-year growth, now we are seeing, business plan at like 50 to 60% year-on-year growth. That is still impressive, because they want to calibrate it with, loss ratios and underwriting results, because, this is proven to be, a key fundamental part. Funding plans have also been revised. As we mentioned, there are, examples also in the European industries of players, trying to raise Series A and B, deviating to M&A route. And there are, also a situation where, players were looking to access public markets in 2023, and most of them are pushing back their plans to 2024. And the two other sort of key items that I want to highlight before concluding is M&A is part of the story. We have seen M&A going on in the insurtech sector in Europe, exactly for the reason we discussed previously. And the last point that is really ties up with the analysis I presented in the previous page, insurance veterans joining the crew. That means that, insurance fundamentals are very important, and the teams are basically using these months in order to, not just focus on the technological part, but also reinforcing the team by hiring people with, a proper insurance background and, a very long experience in the traditional insurance industry. This will, add to clearly their insurance capabilities, but also to their sort of credibility going forward in the sector. So I think I've covered all the key points. I'm clearly available for question and keen to open the debate with all of you. Thank you.
Thank you, Rodolfo. Thank you very much. Very interesting presentation, very interesting insights from my perspective. Particularly, I found really enlightening the insight related to the questions and information that investors are looking for during the conference calls, and the fact that they are increasingly willing to understand about insurance. So I think we can maybe interpret this as a sign of maturity also from investor side. So probably insurtech is maturing also from that point of view, and after the first phase of the hype and big attention on disruption, technology, etc. Now we are in a phase where the fundamentals and the ability to properly run insurance operations and insurance processes will be key for also to raise funds. So thank you very much. If there are questions for Rodolfo, we can use this time, or we can switch to the panel and leave the questions for the end. So if somebody has questions, request for Rodolfo, we can do it now. And if not, if you want to think a bit about it, we can switch to the panel. Okay, let's switch to the panel discussion involving Dominic, Matt, and Rodolfo as well. So, Matt, I would start with you. So, as we have seen from Rodolfo's presentation, 2021 has been a very important year for InsurTech, particularly also from an investment point of view. And within the broader InsurTech landscape, it's been a very relevant year also for embedded insurance. In terms of growth of new companies, in terms of development of the market, in terms also of investments. Roughly 5% of the overall investments in InsurTech in 2021 were in InsurTech companies operating in embedded insurance, which is a remarkable percentage. So at Sonor, you've been very active on embedded insurance, among the other topics. So I wanted to ask you from an investment and M&A point of view, looking at embedded insurance particularly, what have you been tracking, and what are the 2-3 things that have particularly captured your attention?
Thanks, Yuri, and thanks, Rodolfo, as well. I thought that was a great presentation, particularly liked some of the new data I hadn't seen before that Barclays were pulling together. But Yuri, and to your question, so I think there's the more obvious, right? So let's line it up, following from Rodolfo's M&A and investment focus. You have like travelers acquiring what was the darling of InsurTech, Trove, in 2021. I thought that's particularly interesting, and that ties in with the opportunity to look at M&A as an accelerant, to use Rodolfo's word. The bigger investments like Sure, I think they landed about 100 mil, was it, on $500 million valuation, so a Series C for those guys. So so it's some big money going in. But as well as that, the thing that really interests me, and I think this is just a very subjective thing that I love to look at, is the more kind of obscure trends, so more the kind of the immersion activity. So in the UK, we saw that there's a business here called Risk, which has just stepped into the US market as well, but they partnered with Heycar on the embedded, and I thought that partnership was particularly interesting. But also you've got stuff like out in India, you've got Cover Genius partnering with Pepperfry. I don't know if anyone saw that, but these guys are a furniture retailer, and it's that kind of stuff. It's it's the opportunity from what we're seeing from an embedded. It's a market that is set to be sort of $700 billion worth by 2030, and that's not far away, right? So it's a big old space, and I think the key thing that stands out for me, and the work that we're doing with our clients, so we're talking, the big insurance companies around the world, is definitely the facts and figures, but maybe more the strategic impact of the world of embedded. So when chatting with these guys, there's a slide that we often refer back to where we talk about the the competitor set and the changing kind of industry landscape. And you just use the words around hype and tension on disruption. And there was very much a time where incumbents would look at one another as competition. Then, as you alluded to, there was this hype around insurtechs, which was like innovate or die, or we're about to be disrupted, and that narrative has definitely changed. There are the challenges, very few, and most of the insurtech landscape is around enablement, and there's a real sort of recognition and maturing in the innovation functions of our clients, where that stuff is table stakes. They know all of that now. But I think what's particularly interesting is the new entrants. And when looking at the big techs of the Amazons and the Googles and the Apples of the world, and then looking at the new entrants, whether it's the banks or the retailers, or the furniture retailers in India, or whatever it be, I think that's where this dynamic of embedded is going to play out in a much more fascinating way than we could possibly ever have imagined, 5 years ago. And so for me, yes, there are some significant M&A and investments and also partnership activities, but I think it's more the strategic impact of embedded that fascinates me as a strategist.
Thanks, Matt. Dominic, you've been investing and building businesses for the majority of your time in insurance, with a relevant exposition in embedded insurance ventures. So I wanted to ask you, is it a thrilling thing to build a new embedded insurance product? And what makes this time an exciting time to build new embedded insurance businesses?
Yes, thank you for that, Yuri. So not every embedded business is exciting. We can observe a few iterations over the past few years. I think the first temptation from insurance companies was simply to offload whatever product they may have off the shelf. And you want a product, here it is. We have critical illness. We've been doing the same critical illness for the past 50 years. Have at it. It's distribution for the insurance company, and it's commission and revenue, a revenue stream eventually for the distributor. A more interesting iteration is more around making sure that there's a good affinity between the product being sold, the target end user, the brand, and making sure we can do that in a way that is improving the value chain. And so that may be the second iteration where it goes beyond simply revenue, but it's about building loyalty, providing good services, making sure that at the end, there's an improvement in the way we sell insurance and design insurance. So that would be the second iteration. And the last one, the one that is the most exciting, is really how can we make sure that we really embed the insurance product where the end users are, making sure they get the insurance product the way they want it, what they want at the right time. And this is where eventually we don't even ask any questions. We know enough, we have enough data to be able to risk profile instead of underwrite. And the distinction I make between the two is underwriting is the art and the science of inquiring about the risk and the opportunity. And what I like with profiling is I don't need to inquire. I know everything already because we have this an ecosystem, we have access to some data, we can eventually augment those data with additional sources of information. And then we know what you want, when you want it, and we give it to you right away, no question being asked. And so that makes the experience seamless as much as possible. And so that's where embedded and ecosystem orchestration come in together. And that is really what is truly exciting, because for once, insurance is making a difference, and you don't need to go out of your ways to buy your insurance. You can have it exactly where you want it.
Yeah, thank you, Dominic. Actually, you touched a point that is absolutely basic when we talk about embedded insurance, but not only about insurance innovation. That is data. And the big difference today is determined by the ability to access and properly use and build value on data. I was in Milan yesterday, and I ran a workshop with one of the biggest brokers, global broker, And during the workshop, they asked me, what you think can be the role of a big broker like us in embedded insurance? And the reasoning on this, we agreed on the fact that the big role that big broker can play in embedded insurance, and the reason why they should play in this domain is for related to their ability to use and to build value on data. This is one of the big assets that they have and that they can leverage to establish their presence in also in embedded insurance. So thanks very much, Dominic. Rodolfo, I return to you. We have seen, and you also mentioned this during your presentation, we've seen many interesting IPOs last year. And recently, for example, Alan in France, they raised $493 million and reached a 2.7 billion valuation. So I wanted to ask you, from the perspective of a professional investor like you, what makes startups and innovative insurtech companies investment worthy?
Well, I think this is a good question. And by the way, I don't know if you guys can see me or not anymore.
Actually, no, we can't see you. We see
yeah, I see, but very strange. Apologies for that. But
no problem. No.
Going back to your question, I think like in all the industries, when it comes to investing, when it comes to IPO, you need to have some basics, right? And the basics are clearly to make a company investable. That applies to insurtech, but apply to any other industry. And the basics are clearly the market opportunity. So market opportunity needs to be there. Like there is to be a market to be attacked and a market to be conquered, where the market opportunity is big. So this needs to be there. The management team needs to be there, especially when you talk about investing in early stage company. You are investing into an idea that's true. You're investing into an idea that will play into a big market, but you are also in particular investing into a management team. Because more people can have an idea, less people can, with the same idea, be successful. So I think, these are sort of basics that are respectively from the insurtech industry. Then adding the tech and the insurance component here. Clearly, insurtech, you need to have the tech, right? So you need to invest into a company that has, the tech expertise. So you need to have the tech infrastructure, the tech capability, and what is more important, you need to own the technology. You need to have, 100% of the technology needs to be your technology. Otherwise, you can't really position yourself as, an insurtech technological player and you buy technology from someone else, right? So this is an important piece. And I think the fourth ingredient is, especially if you are, let's say, or you are planning to be a full stack carrier, I think all your insurance, you need to have, you need to get your insurance fundamental right in terms of, KPIs, in terms of underwriting capabilities, and in terms of, path to profitability. And I think, this again ties up with what we were discussing. I think, having visibility and a clear path to profitability is also becoming, more and more relevant and important for investors.
Thank you, Rodolfo. Matt, Dominic, same question for the two of you. When it's about partnerships, investments, and M&A, do you see different approaches from investors in different regions, linked to North America, Europe, and Asia? So the question is, looking at partnerships, investments, and M&A, do you see different approaches from investors in different regions? Matt, starting with you. your point of view?
Yeah, absolutely. But I mean, we all know this, right? We see this in every walk of life. So let's maybe, if I cover the US and Europe, and leave Dominique to definitely tackle Asia and beyond. But we you know, so the investment maturity, the deal sizes, the risk appetite in the US is and has for many years been much greater than it has in Europe. The consequence of that is we've lagged behind in the European level, and I think, Rodolfo, you cited a few good examples like Zego, WeFox, ISI, you know, all companies that are getting decent rounds. Even Alan, you know, Yuri, to your question there. But it's nothing like the US. And I think what's particularly interesting at the moment is what the investment in these markets is creating, and actually it's enabling lots of these European businesses to spread not only across Europe but actually into the US market. And I think a real attraction to that is not only the size of the market out there, but it's for potential investment rounds. And actually heading to the US to get more money into your business to scale faster, more globally, I think is a really interesting thing. And in parallel with that, from a partnership perspective, it's interesting seeing our US clients becoming much more interested in European startups as well. And I think that's you know, again, maybe it's a very British mindset. So forgive, especially if anyone in the US is on the call so early. But you know, we often think about the kind of US mentality being very kind of parochial, very kind of, you know, very local, and not needing or wanting to look outside of their territory. But that's definitely changing. So, you know, recognizing that innovation is a truly global landscape, and being more accepting of both investing into companies outside of their territory, but also partnering with those businesses as well. But Dominic, I'd be very interested to hear your views too.
Yes, you're right. The US tend to have deeper pockets, so maybe they would invest first. But we don't need to invest to partner. And in fact, it may make sense to try before you buy. And so partnership, I think, makes plenty of sense as a way to grow the business. And I've seen that happening a lot in Asia. So first we partner, and eventually after that, we decide to invest, because at some point we may decide, well, I have co-designed an interesting product here with this startup. If I don't invest in them, someone else will. And then my co-design is going to belong to someone. So then it may make sense as a stage 2 eventually to start getting into the investment. But also, M&A is one of the potential solutions. I would be very wary if I were a startup and if I were an insurance company. If I am to do an M&A with a startup, am I not going to kill the golden goose? So let's make sure the companies are separate culture, governance, way to assess success. Because if it becomes one, that's the best way to make sure that whatever amount of money you spend is going to be lost. So we can buy, we can invest, but let's keep it separate.
Sometimes they want to kill the golden goose though as well, right? It's I mean, we have clients coming to us, especially around COVID time. It's pretty dark, but is looking at cheap acquisitions just purely for talent. They didn't care about the technology. They didn't care about the kind of the upside, you know, which Rodolfo is talking about from an Alan example. They just needed the you know, the data scientists or whatever it was in particular, and they were absolutely you know, set on buying a company and just closing shop and just taking all the team. You know, it's a strategy, right?
Yeah.
Agreed. Thank you. Great conversation. Thank you very much. Rodolfo, looking at the broader scenario, it looks like the macroeconomic scenario is changing. With interest rates increasing, inflation increasing, skyrocketing in some countries, driven by the increase in the cost of energy and raw materials. So, given this changing scenario, do you think that this is going to have an impact on the investment strategies of professional investors? Somebody, for example, says that there are signals that investors are moving away from the most risky investments to move towards more mature companies. So what do you think? Do you think the changing landscape is going to have an impact on investment strategies of professional investors?
Thank you, Yuri. I think, as mentioned in my speech, I think, investment will continue to flow for the right companies in InsurTech. This is sure for me. I think it will probably more a matter of, scrutiny that will be bigger. So as we touched upon previously, investors, I think we'll try to focus more on, sometimes mature businesses. Raising sort of Series A's or Series B will probably be in the current environment a little bit more challenging. And, as mentioned, M&A route might become, I would say, a bit more popular. There are clearly, already some sort of big and large players that are cash rich. And for these guys, I think that are already well known, call it proven story already. Clearly, when there is a time of uncertainty, investors prefer to basically go into a safe boat. Like, I still think InsurTech, it's a great industry, but, instead of investing into a Series A of this company that, it's more, I don't know, I'll rather prefer go and just put a small check into a 500 million raise of already a well-established player where I already know that in the cap table you already have top names, right? So I think this is more sometimes the attitude we actually see these times. Clearly, the big challenge for each of the players is to try to cope with the current trading in the market. Every time you go for a fundraising, you need to be able to articulate in front of an investor, which are the things that make you sort of different, which are the things that you will do different in order to address, the concern. And I think, but in any case, I think a concrete example I can bring is, if you think about, clearly Alan recent raise, but also, in October 2021, for example, where the public market was already trading down quite significantly. We as Barclays have been able to assist ACO in India in its Series D raise, and it was an enormous success. So I think this is again a proof that in my view, investors' money are there even in challenging times. So they will not disappear, but clearly you need to tell the story properly, and you need to have clear strengths and differentiation points.
Thank you. Very interesting points. Matt, Dominic, last question for you. Looking at embedded insurance, InsurTech investments and M&A activities, what do you think we can expect in the next 2-3 years? Dominic.
So I would say I would expect more of the same, because there's a clear trend, regardless of the current circumstances, towards personalization and convenience, and embedded those do both. So there's a clear trend to keep at it, to keep investing in it. But I suspect we will see more of the more evolved kind of embedded, the more added value. So not just a distribution play, but a risk profiling play. And because that's, as Rodolfo was saying, this is really what is going to make the difference now. Maybe 5 years ago, being able to enroll and pay a claim in 60 seconds was enough of a differentiator. But if the insurance product is still the same as for the past 200 years, that's not good enough anymore. We can still improve in user centricity. And the way I see it, the next iteration will be around how can I really understand the customer now that I have all those data. And so I can see a push toward a bit more of an ethnographic input rather than just data analytics.
Thank you. Matt? You're on mute, Matt.
2 years later, still on mute. Amazing. Forgive me. 3 things. One is continued growth. So the size of the opportunity is huge. And last year, the investment represents a fraction of I think its future potential. And another stat we picked up in an interview recently was it's an estimated embedded is going to comprise of 11% of incumbents channel weighting. You know, it's a big play here. So growth is definitely continuing from an embedded perspective. I think the second is more breadth and depth, or maybe breadth and sophistication. So I think the point Dominique is talking about, things are going to become a little bit more sophisticated continuously over the next 12 to 24 months. But I think also a lot of conversation around embedded is associated with P&C, and I think the breadth thing is interesting. So I think Sebastian is on the call from the Care Voice. So we've just done a piece of work recently with him, looking at embedded health, for example. So actually broadening out from P&C into other spaces, I think is going to be particularly interesting. And then I think the other thing we'll see. So the third point is more open innovation. So again, to Dominique's point, more partnerships with and between incumbents and insurtechs. That will continue for sure.
Thank you, Matt. Sebastian, if you wanted to comment, you're more than welcome, considering that Matt mentioned you. So feel free as an option, obviously.
Yes, thanks, Matt, for mentioning the company, and thanks, Yuri. No, for sure. I think we see a natural evolution, right, from embedded insurance to embedded health, and looking at different scenarios. Obviously, it's to bring similarly as embedded insurance, to bring to non-insurance player embedded health service together with other line of insurance, whatever, health, life. That's typical natural extension. But you can also just simply think about insurance when they start to embed health services with their insurance offering, with their customer touch points. So we've been seeing some example of that, but I think there is definitely an acceleration. And third one is more about health players, right? Health players who are can also naturally embed insurance with their health, broadening their health offering, and then have health plus insurance. So I think this embedded health category is nascent and is accelerating. Yeah, soon we'll have some work out, and there's a white paper defining the category with some of you been contributing. So yeah, look forward to get more feedback about this work.
Yeah, for sure, Sebastian. Thank you very much. Yeah, I see that Tristan had to leave. So yeah, we have reached the deadline for this workshop. So I wanted to thank you everybody for being here. I hope it was an interesting and stimulating conversation for you. You will have an opportunity to meet in person many of the people that were on this call during our plenary meeting, the 14th of June in London. I remind you to confirm those that have not already done your participation to the plenary, and provide the names of the people that is participating from your company. Thank you everybody for being here, and see you the next time. See you soon. Thanks a lot. Bye.
Thank you very much.
Thank you, everyone.
Thank you very much.
Bye-bye.
Bye.
Thank you, Yuri. Thank you, Yuri.
Thanks very much. Take care.